So it's a great pleasure for us to have Dr. Aziz, who is the head of our Office of Regional Economic Integration. And Dr. Aziz is an expert on regional economic matters and also macroeconomic policy and trade policy. Ivan, please.
Good morning, everyone. Mr. Sharma and Ganesh already explained earlier about the purpose of this sort of a week meeting, and I hope it's clear for you what is really the purpose. But what I'm going to say in I don't know, maybe 50 minutes or 40 minutes or so, is really giving you the rationale why we are doing what we are doing now. That's number one. And also, what are the challenges that trade policy makers are going to face in the coming years and so forth. But before I do that, let me give the background. So this is not the rationale, but this is the background. Why we set up AIEN, which Ganesh just introduced. It all started with the request from one of the trade ministers in one of the member countries of the ADB. And the way the request came to us was in the form of sort of complaint, okay? And the complaint is the following. In the 80s, in the past, when policymakers, especially trade policymakers, would like to come up with new initiative, and of course, when we talk about trade initiative in the 80s, basically trade liberalization, because those were really the one that was pretty dominant during that period. When they wanted to discuss about that, they can interact with a number of groups of the society, ranging from academics, from NGOs, as well as from other parts, the business community and so forth. So in a way, it was relatively, quote-unquote, easy. Now, her complaint was that that period is gone. And I remember vividly, she even used the word, we're all lonely now. So the trade policymakers felt lonely. And I asked her, can you elaborate? What do you mean by that? And the way she described to me is that, you know, these days, trade policies are different than trade policy in the 80s. And it is rather difficult for trade policymakers to find counterpart to discuss about. And when it is difficult to find counterparts, including, you know, members of the society as well as the business community, then it is very hard to expect whatever new trade initiative or new trade policies be widely accepted. And this is one of the reasons, not the only one, but one of the reasons, she claimed, why it is so difficult these days to get the new policy come across and then actually implement it. In fact, our office, led by Ganesh, also did a study in terms of the utilizations of the FTA, you know, free trade agreements and so forth. These trade ministers have been working very hard. You know, sometimes it took years to have FTA signed between two or more countries. And yet, when it was signed, when it was agreed, the utilization is very low. In fact, it's only ranging from 20 to 30% and so forth. Now, of course, one can speculate in terms of the reason why. It could be that the information was not, you know, widely disseminated, or for other reasons. But that's beside the point. My main purpose of saying what I said in the last 5 minutes or so is to give you background why we are doing this. Why ADB, especially ORE, Office of Regional Economic Integration, is doing this. Why not, you know, other international organizations? So the answer is pretty clear, because the way we work is that we try to facilitate and respond to requests from the member countries, okay? Now, what I'm going to say in the next 20, 30 minutes or so is really giving you, as I said, the rationale of why we are doing this. And this is related to the requests from member countries. If we look at the chart, let's go to the first chart. There are three facts that now we are facing. Fact number one is that tariff has been going down in the last 4 decades or so. That's fact number one. And as far as Asian countries are concerned, the region has been closely sort of integrated with the global economy, which I'm going to say in a few minutes. What do I mean by that? That's fact number one. Fact number two, many Asian countries are trade dependent. This is the reason why when the global economy is in recession or slowing down like what it is going on now, there is a great risk that the Asian economies will be affected because we are so dependent on trade. As well as FDI, because trade and FDI sometimes come hand in hand. Okay? So that's fact number two. Fact number three, and this is not only in Asia but all over the world, the trade pattern has been shifting, has been moving more towards intra-industry trade, which I'm going to explain later what does it mean. But for academics like myself, because I'm from academics, this is really big challenge because one has to reassess the existing trade theories. I remember in the 70s we were studying about the comparative advantage, and the trade pattern is based on comparative advantage. And I will show you in a few minutes that that is not really what's happening in the world right now. Okay, so those are the three facts that really stimulate or drive what we are trying to do the next few days. Next. So let's start with what happened with the tariffs. Yes. It's clear from this chart that since the beginning of the WTO round, well, at that time it was called GATT, in 1947, all the way until the Doha round, you can see that the tariff has been declining, and it's declining very fast. And as expected, you don't need to be rocket scientists to understand this. As a result, you can see the volume of trade, both industry as well as agriculture trade, has been increasing. So that's, if you want to call it, the achievement in the last 4 decades or so. Next. Now, if we look at by countries or by regions, many, not all, but many of the Asian countries are leading in terms of reducing the tariffs. And that applies as well to manufacturing and capital goods. The charts, the bar charts at the bottom, that reflects the tariff for the capital goods. But even in the manufacturing sector, it has been declining as well. Next. So this is the average applied manufacturing tariffs. As you can see from this chart, next to the industrial countries, the tariffs of manufacturing has been declining very fast, and Asia in general has been leading, even though within Asia there are some differentials between East Asia and South Asia and so forth. Next. So, that means there's not much room left for trade policy if we are talking about tariffs. What is coming in the next years or decades or so, it's no longer the discussion about tariffs. It's more the discussions about what I call the non-policy trade barriers, as well as regulatory barriers. Now, that's why during the next few days you will hear a lot about issues like trade facilitation, issues about reducing transportation costs, issues about port efficiency, and custom, and so forth. So that is the reason why we are going to discuss what we are going to discuss in the next few days. Now, but there is also important development. If we look at the transformation in both technology as well as the economic transformation around the world, you will see that it's getting more and more product fragmentation taking place. As a matter of fact, this is one of the most important features of the what is called the production network, which is very big, very big. And I can tell you that whenever we travel to outside the region, many of the questions related to trade to us is really, how did Asia do it? So if there is something that Asia has been very well known as far as the trade issues is concerned, is really the production network. So production network has been going in a big way in Asia. Now, what does that mean? Well, that means if we are having this production network, we are talking about higher competition. And I'm going to explain in the next few minutes, please. Next. Next. All right. So this is the trade patterns within selected Asian countries, and I'm looking at only selected Asian countries, and the thickness of the arrow indicates the size. So, for example, between ASEAN and the PRC, you can see that the PRC export to ASEAN is exceeding the imports. Okay? Whereas you can see the export of the PRC to the rest of the world is far exceeding the import. And that explains why PRC is known as the surplus countries. Next. But if you look at within Asia, if you look at the trade between PRC and Korea and Japan, it's the opposite. So I know this is nothing new, but I'm rather surprised whenever we had the discussion at the global level, not many people realize that within Asia, China is not always surplus, depending on which countries, which trading partners that you're talking about. Now, that leads to, quote unquote, the difficulty of asking one member countries who are in deficit to make adjustment, including exchange rate adjustment. Okay? But that is different issue. But that is the reasons why there is a rationale for exchange rate cooperation, for example. Next. But if we go a little bit more detail by distinguishing the commodities into two, intermediate goods and final goods, it is very clear that the East Asian trade has been heavy in intermediate goods, whereas the final goods of Asia are really with the rest of the world, the third markets, if you wish, that is the US and Europe. Okay? Now, I said earlier that the production network has been going on in a big way in Asia. What happened in the next 10, 20 years? It's going to go even a bigger way. And the reason is this chart. With what's happening in Europe, with what's happening in the US, it is ill-advised for Asia to continue to rely on the third market, on those markets. That means now in both categories, intermediate goods as well as the final goods, Asia has to try to think about trading with other parts of the world, not necessarily relying on the US and Europe markets. The proof is in the pudding. Since the collapse of Lehman in the fall of 2008, Lehman Brothers, that led to the global financial crisis, we observe the volumes of trade between Asia and other emerging markets has increased tremendously, including trade within Asia. So the intra-Asian trade has increased tremendously. Next. I just came back from India yesterday, and we talked with policymakers in India, including chief economists, not the chief economists, the chief economic advisors. Okay? And he told me that China, for the first time, became the biggest trading partner for India. It reached 60 billion last year, despite all issues remains between the two countries. Okay? Now, this is almost like by default when your biggest third market, i.e. the US and Europe, cannot be relied upon. Of course, you have to rely on other parts of the world, including Asia. What does that mean? That means production network is going to go even in a bigger way. And that posed challenge for policymakers. As a matter of fact, also challenge for academics, because we have to revamp some, not all, some of the international trade theories. You know, in the past, what we learn is the trade pattern depends on comparative advantage. So if you have two countries, one is labor abundant, the other is capital abundant, the trade pattern predicted by the theory is that the labor abundant countries will be exporting labor intensive, and vice versa, the capital abundant countries will export capital intensive. What happened in the world in the last decade or two? So, trade between many countries, be it capital abundant or labor abundant, are all within the same industries. This is what is called the intra-industry trade. Next. This is just a chart showing what I just said a second ago, how even Africa, and this is a case of the Africa vis-a-vis India and China, the trade between those two has been growing very fast. You may call it South-South trade, whatever the term you like to use, but this is happening primarily because the third market, the traditional market, cannot be relied upon. Next. FDI. The region also heavily dependent on FDI. Next chart. If you just classify capital inflow into Asia into three categories, because this is the standard procedures, they classify the capital inflow into three. One is the FDI, the second is portfolio, and the third is others, including debt markets, debt flows, and so forth. Okay? There are at least two interesting facts. Number one is that FDI has been dominating of these capital flows to Asia. Number two, even if it is too small, it's too far from you, you can see from this chart which one is less volatile. It's FDI, whereas portfolio and other investment are more volatile. So it is no doubt that the region will be advantaged by the fact that majority of the capital inflows is in the form of FDI. So what we are trying to do, what our office is trying to do, trying to understand what is this link between FDI and trade and so forth. So what we did, well, we did many, many different things, but what I'm going to show you is just one of those many. Next. Next. So we try to identify what are really the important explanatory variables to the capital flows. Okay, and as I said, there are three categories of capital flows. The result is next. So if you look at the coefficient for the FDI inflows vis-a-vis portfolio inflows, which is the FPI inflows, and then other investment is definitely the largest coefficient. So, but this is nothing new. The FDI and trade are much more closely related compared to the other capital flows. Next. Now let me talk about the intra-industry. Next. So, if we, as I said earlier, if we are looking at two countries, and I'm using just a simple example of two types of goods, machinery and toys. Toys are labor intensive, machinery is capital intensive. In the past, what we learned from the concept of comparative advantage is that the two countries will exchange according to the intensity of their factors, right? So that is called the inter-industry trade. But as I said, now the world has been moving towards more intra-industry trade, which means two countries are trading the same type of industries. Different differentiation, of course, there's a product differentiation, but in the same category of industries. Now, there are plus and there are minuses of that. Next. Next. This is not too important. Now, the plus is that the intra-industry trade, compared to the comparative advantage-based trade, it's more innovation stimulating. And number two, that intra-industry can more easily exploit the economies of scale. And last but not least, but I'm going to not to talk about it now, I'm going to talk at the end, which is, you know, the the end of the week, in which I'm going to give the big picture, is really on the impact of trade on income distribution. Intra-industry trade is less disruptive for the factors of allocation of factors of production, which means it will be less damaging in terms of the income distribution effect of trade. So there are a couple of pluses of this new trend of intra-industry trade. But at the same time, there's challenges. And number one challenge is, as I said earlier, now Asian countries has to think very hard how to compete with other emerging markets, because now they are trading with them, less so with the traditional markets. So that is a big challenge. Next. This is just to show you that as far as the categories of goods is concerned, the intra-industry trade, which I'm talking about earlier, is the largest, of course, in the intermediate goods. You know, the classical pattern, the classical story within Asia is that other Asian countries, including ASEAN, are exporting intermediate goods to China, and then China process it, and then China sell the final goods to the Europe and the US. That's the classical story. Of course, it doesn't represent all, but that is the classical story. So the intermediate goods trade within Asia are very heavy, and that is part of the production network, and that trade pattern, it's called the intra-industry trade, because what you're exporting is basically also manufacturing goods, but not final manufacturing goods. The final manufacturing goods are sold to the third party. Now, question. Well, logically, this intra-industry trade pattern should take place in the developed countries, but not in developing countries. Wrong. Even in the emerging market and developing countries, the degree of the intra-industry trade has been increasing. Next. This is the chart showing that it doesn't matter whether it is developed or developing countries, the degree of intra-industry trade has been increasing. Next. Now, as I said, this poses challenge not only for policymakers but also for academics. What does that mean? And this is the reasons like people like Paul Krugman has been coming up with new trade theory, which is basically saying that the old comparative advantage-based Ricardo and those guys who develop the theories are always basing on the assumptions that economies of scale are constant return to scale. But reality is that there is an increasing return to scale. That's number one. Number two, the assumption that has been held is always perfect competition. Wrong. In reality, it's imperfect competition. As a matter of fact, there is monopolistic competition. Now, of course, one simply asks, why those people in the 60s, 50s didn't see what we are seeing now? Well, I mean, my cynical reactions, academic cynical reactions, because it's easy to deal with constant return to scale. Most of them are linear. There's no non-linearity. So the mathematical solution, mathematical derivation is much easier. But that's only a cynical comment. The fact remains that the world trade pattern has been changing. And it is changing in a big way. That means challenges for the policymakers as well as the theoretician. Next. One of the often quoted example of these implications of this new trade theory and the role of monopolistic competition, the role of innovation and so forth, is something to do with the external economies. Now, external economies is the economies of scale at the level of industry, not at the level of firms. Because when people talk about external economies, many of them talk at the level of the firm. But external economies is at the level of industries. Why this is important? Because we are talking about inter-industry trade now. I'm sorry, intra-industry trade. Okay? Now, with economies of scale, external, in the category of external, the most quoted example is, how do you explain Swiss watch has been dominating the world? Even though the fact that the cost of productions can be much lower in developing countries, and I'm using the example of Thailand here. Why Thailand is not producing watch and dominating the world? Because the cost of production in Thailand is lower. If you look at this chart, the average cost in Thailand is lower. The reason is precisely because of the economies of scale. No, not move yet. The reason is because of precisely of the external economies of scale. If you look at the production costs at the initial level here in Swiss, it's P1. Okay? But if you look at the overall average cost in Thailand, can be lower, yes. But for Thai watch producer or potential watch producer to enter the market, that is very difficult. Why? Because they cannot compete. The initial cost for Thailand is Z0. It's still higher than the initial cost in Switzerland's watch. So this is one mostly quoted example, and there are thousands of other examples explaining why this new trend of the monopolistic competition, external economies and so forth, changed the trade pattern. As a matter of fact, some of the proposal or some of the recommendation based on the comparative advantage theory may no longer be valid. So from that standpoint, it's a challenge for the academics, those who build and work on the conceptual frameworks. Next. There's also the questions of new economic geography, and this is, you know, other economists like Fujita, Venables has been working on this. Basically, they're asking why the old trade theory did not predict what is going on now around the world. That is the agglomerations of industries taking place in one country or in one region. Industrial complex, for example. It was not predicted. So this is another challenge. Next. There come the trade facilitation. Now, as I said earlier, when the old trade measures like tariff has been declining and declining very fast, as you can see the charts earlier, what's left? What is the room left for trade policy makers in the coming years? Well, naturally we can say non-tariff barriers, which is not new, basically, non-tariff barriers. But the last decade or so, it shows that there are some of the non-tariff barriers that are very, very important, and it is so important that the costs of imports can be exceeding the standard traditional non-tariff barriers. Trade facilitation is one example of it. Next. You may define in whatever way you like trade facilitation. This is just one of those examples which basically captures the key ingredients of trade facilitation. Okay? So it's port efficiency, custom environment, regulatory environment, and services infrastructure. Okay? Let's focus on the port efficiency and transport costs. Next. Oh. This is an example, okay? Why for emerging markets is even more important to think about trade facilitations. You know, if we compare the trade in industrial countries or advanced countries and trade in emerging markets and developing countries, usually not always, but usually the product sold by the developing and emerging market is less expensive than the product sold by the industrial countries because, you know, less sophisticated technology and so forth. Now, think about the producers. So now I'm looking at the micro side. If you are the producers of those products that you are going to trade at the international market, when you can only sell at a relatively lower price than your counterpart in industrial countries, all the cost of production has to be minimized as much as you can. And transport cost is one of them. So the way I put it is there, a very low cost, streamlined supply chain is needed for emerging market. If we deliver a truckload of cookies, I don't know why I'm using the example of cookies because I didn't have my breakfast this morning, that we sell at 10 cents a pack, it better costs us less than it does to deliver a truckload of cookies that sell for $3 a pack. So transport costs become very, very important. for emerging markets. Next. This is just a chart showing another important role of the trade facilitation in the case of the custom clearance. This chart shows how many days the custom clearance needs in different parts of the world. As expected, in the developed countries, it's much less number of days required. But for developing countries, including Asian developing countries, are still more. How much does this cost to trade? Next. Well, depending on case study, because you cannot really take average, depending on what particular commodities, what particular trade facilitation, and in what country, because each country have different feature and characteristics here. In the case of logistics, account for 33% of shipment costs. Okay? And then you have another example in the case of gains from reducing costs, 10% increase in web host increased rate 1%. So if you spend 10% extra cost on your website, it may increase 1% of your trade. And then 10% fall in telecom costs, increased trade 8%. Now all this is based on empirical studies, not concept, not theory, but facts, empirical studies. Now, of course, all these are economic benefits. After 9/11, life is not all about economics. There are other issues. One of them is securities. So trade facilitation, improvement in the port, improvement in the custom clearance and so forth, will also improve the security factors. So from any angle you look at it, trade facilitation is really holding a key role in the upcoming trade flows. Next. This just shows the classifications of trade facilitation or factors that contributes to the increase in trade, and you can see the services is holding the most important factors. Now, unfortunately, this is really the area that's more difficult. Earlier, I mentioned that in the past, the trade ministers who complained being lonely because she didn't have a counterpart to discuss about the trade policies, some of the reason is because it's more difficult actually. Because when you deal with tariff, it's relatively, I'm not saying it's easy. I mean, talk to the trade negotiators. It's very difficult even to agree on tariffs. But certainly the concept is much easier than when you talk about something which is less tangibles, including services sector, you know, harmonization, standardization, and so forth. So that is far more difficult. And yet that contributes the most to the trade volumes. And then followed by the port efficiency. Next. This chart shows the gain from trade. And you can see, as I indicated just 1 second ago, the biggest gain is really if there's an improvement in the services part, and then in the port efficiency, and depending on which part of the world and so forth. So, all in all, what I've been saying here is that trade policy challenges is huge in the coming years, and not only huge in terms of the sort of the extensification, but also it's more difficult. It's more difficult, and that's why it requires more understanding. This is one of the reasons why we are conducting what we are doing here, so that we can sort of have common understanding in terms of the new trade policies. These are the challenges, and the rationale as far as this AIEN program is concerned, I gave you the reason why we started this, because Trade Minister was asking us to do that. But I hope it's clear from my explanation that there is even deeper rationale why we have to start thinking about this issue more clearly. Now, let me end by what I call the etc. next. Other issues, other trade issues. Okay. You know, I think I can say this now, but let me first give clear statement that what I'm going to say in the next few seconds is what I personally think. This is not the ADB view, okay? I think Doha round is dead. Now, of course, you don't hear that officially. You don't hear. No officials will ever say that, not even in ADB, okay? But as a person, as an academic, I think it's dead, okay? Now, this is very sad. Why? Because from any angle you look at it, whether it's practical angle or theoretical angle, multilateral is still the best way to go. Multilateralism is still the best way to go. Now, of course, one can argue, yes, but it is not practical. I'm not saying about whether it is easy or not easy. I'm saying that conceptually, multilateralism is still the best way to go. I remember a few months ago, when was it, in Jakarta, we had the discussion with Pascal Lamy, and he admitted, because it's a closed door, of course, it's not open, there's no media and so forth. He admitted it's the best way to go, but it's not working. Because the fact is, regional trading arrangements are proliferating all over the world, especially in Asia. And I'm sure, you know, looking at the program that Ganesh introduced earlier, some of the speakers will talk about it. You will see that. Now, a study that was recently commissioned to Jagdish Bhagwati and other of his colleagues, you can expect, because those who know Jagdish is 110% for multilateralism, right? So he's been very critical over the FTAs and so forth. But what is interesting, I look at that study next. That is the study, actually, the final report of the high-level trade expert group. It was issued just 2 months ago, May 2011. What is interesting from that report is that they blame politicians. So we economists are free. I mean, we are not blamed. They blame the politician. So they said it's really the political leaders who make all this is happening. Okay? But that is their conclusion. Also interesting, and I quote the conclusion, Doha captures many of the basic political problems the wider multilateral trading system faces. For example, a changing political economy among the largest and most influential members, driven above all by the rise of the growing economies of Asia and Latin America. Bilateral trade agreements, and above all, a deficit in political leadership at the level of the states that actually make. That's what the report mentioned. Now, but we are living in reality, so we have to face the reality that FTAs are proliferating. So the question now is how we can make use of the FTA the best to our benefit, as well as how can we make the FTA, the proliferations of FTA, closer and closer and closer to be consistent with the WTO multilateral principles. I am pretty optimistic about it, and I'm happy that Pascal Lamy was also optimistic about it a few months ago, at least, when we met. And from that standpoint, what we are doing now, trying to understand the complexity of the FTAs and so forth, at the same time, trying to understand what is going on at the multilateral levels and so forth, it's very, very useful. It's very useful. It's not just looking at either or, but we are trying to understand both, the regionalism as well as the multilateralism. The second, etc., from me is about aid for trade, and this is the last one. Many small developing countries were not participating on the multilaterals agreement, were not participating in the free trade agreement at the global level, not because they don't want it, but because the difficulty they are facing. Because when you are poor developing countries, small poor developing countries, you are still faced by myriads of development issues, ranging from poverty, unemployment, infrastructure, not to mention environment and so forth, right? So it is only logical that the world is trying to do something about it for those countries. This is the background of the Aid for Trade concept, which was launched in 2005 in Hong Kong. And there are a couple of points in the Aid for Trade. I just mentioned about 6 agenda of the Aid for Trade there. And I can share with you that our office, ORE, Office of Regional Economic Integration, has been working also in this area. As a matter of fact, when we launched the AIEN, we did that in the occasions of our discussion, or 2 days conference, 2 days or 3 days conference, I forgot, 2 days conference on Aid for Trade. That was attended by also Pascalami. So, Aid for Trade is a concept that makes sense to me. Now, of course, the question is, how do you define it in a better way? Because there are still, I remember in that 2 days meeting, there are still many complaints and many criticisms about the concept of Aid for Trade. For example, which country is supposed to receive, which country is supposed not to receive that aid. And also, how do you channel that aid that's supposed to, be designed to stimulate trade and so forth? Because it's very difficult when we look at the outcome because of a particular event. It is very difficult to say that whatever the final outcome is because of that event. So if, for example, the developing countries' participation in the global trade arena is increasing, we cannot claim that this is because of the success of the Aid for Trade, because there are many things happening here. So in evaluating the program, including the program of Aid for Trade, we have to be a little bit more careful. But having said that, still the concept of Aid for Trade is very important, and that is the reasons why we are, in our office, we are also working in this area. Thank you very much, and I'm more than happy, if there's a time, I'm more than happy to entertain